Hey traders, this is Christian from Hertz Tribeca Trade Group with your Tuesday market recap. And S&P, another snoozer of a day as we're, basically another doji candle. So Tuesday and Monday, very similar looking candles for the day. We tried to rally again and, kind of faded during the day. So what does this chart look like? I'm actually seeing that we could actually get a buy signal. We're still sticking above value. So the main level to watch in the S&P 500, which you can, this is going to be S&P futures, but 2172 and a quarter. As long as we stay above that level, I think you want to remain long S&P. And like I said, on the Raptor indicator, this white line is about to cross over the red line. That would be a bullish signal here. So while we're kind of just, chilling out in the beginning of the week, maybe we'll see a little bit better of a move later in the week. We do have retail sales coming up, I believe, on Friday. And very interesting, I think, this type of market, what are we seeing? Well, you go back to the JCJ index, and just very indicative of what this implied correlations of the S&P 500 is showing. We're at a one-year low in implied correlations. I've been talking about this quite frequently. So when you have today, you have a couple of sectors that really outperformed. The semis did pretty well, and retail did not. So retail was down about 1.5% on the day. More trouble in this group. It seems, this happened last week as well. Big move down after the auto sales. A couple names disappointed today. Gap had same store sales. They were down quite a big clip. Target also, there was numbers about possibly their monthly sales being lower than expectations. So you could see a big red candle, 1.4%, the equally weighted XRT retail ETF was down. Also XME, metals and mining, that was led by US Steel announced after the close yesterday that they were going to sell some more shares in a secondary offering. So they were down about 6%. They brought down a couple different steel names. So XME, metals and mining, which is a lot of steel names, one of the better performing areas of the market this year. I think this ETF is actually up close to 100% for the year. So it's had a really nice run. But if you go to the weekly chart in XME, so we've rallied from $12 to $28, and we're pausing right at the top of value. So we've gone all the way through the yearly value area, and now are pausing a bit. We still are burning off some overbought levels. You could see the RSI. So we were actually talking about this in the trading room. I think selling, maybe September call spreads, maybe the 30, 32, 34, something like that. That's a trade that we talked about in the trading room. Not the worst idea in the world if XME continues to kind of pause and consolidate before making a possible next leg higher. There was also some news out in that space after the close. Cliffs, which is down, another name that's really rallied from the lows, that also announced, I think, $300 million in shares that they're going to be selling. So secondary offering there as well. So that name is also down. But so you have XME, which finished down 1.6% on the day. You have retail finishing down 1.3, 1.4%. And meanwhile, the S&P is about flat. So you continuously have, which is why we have these doji candles back in the S&P on the daily chart, because you have some sectors that are really doing poorly, and you have some sectors that are really doing pretty well. Semis did pretty well. That's SMH. MCHP had good earnings last night. So they continue to move higher. They're still overbought. You also look at the Qs. Qs are also trading above value. Also looks kind of similar to the S&P chart. Still a bit overbought here. So we haven't really burned off any of these overbought levels. The RSI is a 72. So, I think with the VIX, as low as it is, it's not the worst idea. I'm net long. My portfolio is net long, but I've got a couple, I added a little bit of some put trades today, just portfolio hedging, basically with the VIX. Let me just bring up this chart. This is the VIX overlaid with the S&P, 1166 in the VIX. It's cheaper as ever to buy protection on your portfolio. So I'm not talking about buying VXX calls. VXX had a 1-for-4 split. They have to keep doing this in VXX. I still do not get what the draw is with people buying the VIX for protection, or VXX. If you go and you look at a chart of VXX over time, again, VXX had a reverse split. If they do not have reverse splits, this thing would go to zero. So again, talked about this quite a bit. VXX was never really trading at 30,000, but they keep having to have reverse splits every couple of years because it just keeps going lower and lower and lower. So, just as a warning to investors, other than a day trade, do not own this in your 401k. Do not own this. Do not own VXX, VXY, VIXI, any of these products. These products are all you have to do is look at a 10-year chart or a 5-year chart, and you can see what these things. So while they've had momentarily, moves, but a lot of times that's something really unpredictable when you have a spike in the VIX. Use the VIX to tell you SPY puts are cheap, IWM puts are cheap, Qs puts are cheap, and protect yourself that way. All right, so that's my rant on the VIX ETFs or ETNs. What was particularly interesting today, which didn't get a lot of coverage, take a look at what Europe did today. EWG, the Germany ETF, up 2.5%. This got very little coverage today, and I'm trying to figure out, I don't exactly know why, but if you look at what happened in Europe today, also kind of interesting that the US market did not follow this move, but the DAX finished on the highs, up 2.5%. I think when our markets, when the US markets opened, the DAX was up maybe a point, or percentage. So it really rallied going in over the last hour of the European session. Just huge move. Also, and I think part of there was Munich Re, which came out with, I believe, good earnings. Euro stocks were also up 1.6. So, I really haven't played too much of these markets too much this year. The reason being is they've just had huge, huge outflows. Out of all the ETFs out there, and if you know me, you know that I track this on a daily basis. But some of the biggest outflows that we've seen this year, HEDJ, that's a European ETF, FX hedged, $6.9 billion. This is year-to-date outflows. So on the bottom of the list, EZU, this is your European ETF, VGK, $3 billion. There it is, VGK, $2.7 billion. When you put these three ETFs together, it's outflows of about $15 billion out of European ETFs. And this hasn't just been in one shot. If you read my newsletter, it's been basically every week there's outflows into European ETFs. Also Japan, you could see, the two major Japan ETFs, about $10 billion in outflows. However, so what I'm looking for is for money to start flowing back, for me to start participating, possibly into EWG is what I'm looking at. If you look at the daily chart, nice move from the lows. If you look at the weekly chart, it is just starting to get into the yearly value area. So if that does, the level that I'm watching, which is right around here, about 2610, if we could get firmly into this value area, the yearly value area, and kind of break this downward trend. So it's on my radar. I'm not initiating anything yet in EWG, but it is on my radar. Other than that, some of the international areas have been doing pretty well, such as emerging markets. EEM is something that I've been talking about literally every day as it continues to climb higher. Nobody really talking about how well emerging markets are doing, but I'm long. I've been long EM for the last month as it continues to travel through the value area. Another trade that I'm looking at is getting long FXI. I may have mentioned that in last night's market recap, but FXI also looking pretty good. We did see some activity in FXI today, short dated. I would be looking for a longer swing trade in FXI, but there was a block of 30,000 August 36.5 calls going up, so 36.5 right at the money. But I'm maybe waiting for a down day to go long FXI. Other than that, unusual option activity today, pretty quiet. The big trade today, which a lot of people were on Twitter talking about LGF, I got into this trade. Nice longer dated DEES 20 call, so I was able to hit 2 profit targets in Lionsgate. The vice chairman was also on CNBC today, so got into these for 145, hit targets upwards to 165, so took some money off the table and holding the remainder of the position. Walmart was a nice trade today. Couple other things, every time this big move in retail happens, it seems like there's a little bit of a dip buyer in Macy's. We saw Hain calls. I mentioned the FXI calls, a little bit of Splunk calls today. Palo Alto, there was looks like a spread that went up 140, 160. Other than that, a pretty light day in terms of option activity. Apple, one name to continue to watch, continues to grind higher here. It's above this trend line. I talked about this as well in the last night's market recap, but I would be taking profits right around 110. There's a version point of control up here. These often act as magnets. So I think Apple can continue to grind. Other than that, I'm long BABA. I put on BABA as a day trade. I think it's got a couple more days before it reports earnings, but looking decent here. On the Raptor indicator, trying to fire off a nice buy signal here. So, want to play possibly, hold on to this for a couple days and then unwind it, unwind this trade right before earnings, the earnings announcement. Couple earnings, speaking of earnings, a couple names that, so I am in August calls in BABA. We'll hold on to these hopefully for 2 more days and just looking for a move to continue above the value area. FANG stocks, again, I'm not even going to really talk about them. Not big movers today. Google and Amazon tried to rally and failed today. So, I don't know. I'm not a real big fan of buying the FANG stocks here. The one name I still like is Microsoft. I'm still long that name. Other areas that I'm long, a lot of longer dated swing trades. I'm still long a little bit of Applied Materials, long a little bit of Cisco, longer dated, and still have a couple energy names on, a couple of these MLP names, which really didn't do a lot today. Still long a little bit of Symantec as well. If you're looking for a short, bonds did rally today, but I think telecom is breaking down. If you look at the telecom chart, what's interesting about telecom, it doesn't have as high of a dividend yield. This ETF only has a dividend yield of about 1.5%. So if you think yields are, or TLT is going to sell off a little bit more, like I said, it was strong today, but maybe you could see a move further down in some of these defensive groups that we have been seeing a little bit of reallocation out of the defensive groups into a little bit more riskier names. So that's my put trade for today. I'm remaining long BABA, and I'm remaining long emerging markets. I'm looking at an FXI trade, and also starting to look at some of the European names, considering they've been strong the last couple days. So thank you very much for watching tonight's video. Just a quick look at Disney. They did report earnings. 2 trades that I had on for earnings. I actually bought a few put spreads in Disney. The other name, which was Yelp, I sold put spreads. So that trade looking really nice for the evening. So that's it for today's video. Have a great night. See you on Wednesday.